All right, we've got some breaking news this morning on the economy to tell you about. Canada's inflation rate fell to 1.6% in September. If you're keeping track, that's the smallest yearly increase since 2021. BNN Bloomberg's Paul Bagnell is joining us now with more. Paul, good morning to you. What's the takeaway for Canadians here?
Well, it's good news for Canadians who are weary of inflation. Prices are rising now, as you've just said, at their slowest pace since February of 2021. The headline rate of inflation is now below the Bank of Canada's target of 2.0%. Core inflation is a bit of a different story, and I'll get to that in a second. And economists and traders are becoming more confident that the Bank of Canada will cut its rates, its benchmark interest rate again this year, perhaps by as much as half a percentage point next week. And I'll get to that in a second as well. So all of that is good news for Canadians who have been hit by escalating prices for the things they purchase, and for borrowers, particularly holders of variable rate mortgages, because those are the type of mortgages which are affected by interest rates set by the Bank of Canada. The mechanism is that the bank makes a change to its overnight rate. The big lenders in Canada, and smaller lenders as well, adjust down their prime rates, and the variable rate mortgages and other loans like lines of credit and auto loans are based on those prime rates. So if the market is correct, we should get another rate reduction next week. It could be, as I said earlier, as much as half a percentage point, according to traders in the fixed income market. That market now pricing in a 75% chance of a half percentage point rate cut next week. I spoke with Pedro Antunes. He's chief economist of the Conference Board of Canada. He doesn't take that view, but he does say, but by the time this year is over, the bank will have cut twice by a quarter of a percentage point each time, totaling a further half percentage point from where we are now.
You mentioned core inflation. Can you break that down for us, please?
Right. So the big easing of headline inflation, which ran at only 1.6% in September, was very largely the result of lower gasoline prices. They have a big footprint in headline inflation. Core inflation is a measure that strips out volatile items like gasoline and like food prices as well. And core inflation ran at 2.3% growth during the month of September. So that was in line with expectations. It was in line with August number as well. So we did not see a reduction in core inflation. But keep in mind, the Bank of Canada wants to see inflation at about 2%, and it's so-called, it wants to definitely see it between 2 and 3%. And so even that core inflation number is getting pretty close to the Bank of Canada's target. And the reason the Bank of Canada is now in rate cutting mode is that it largely considers its fight against inflation to have been won. It's now pivoting to a concern about slowing economic growth, and it wants to give the Canadian economy a bit of a boost every now and again by cutting interest rates to make money a little cheaper for borrowers to access.
BNN Bloomberg's Paul Bagnell on our breaking news this morning that we are seeing a dip in Canada's inflation rate, falling in September. Paul, thanks so much for that.